And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2026, and we're diving into Honeywell's fourth quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Honeywell has released some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Honeywell reported fourth quarter sales of $9.8 billion, a 6% increase from last year. Adjusted sales were even higher at $10.1 billion, up 10%. John, what drove this growth?
The growth was primarily driven by strong demand in the aerospace and building automation segments. The company also saw a 23% organic increase in orders, which significantly boosted their backlog to over $37 billion. This robust demand has been a key factor in their sales growth.
And what about profitability? The adjusted EPS came in at $2.59, up 17% from the previous year. How did they achieve this?
Despite a decrease in operating income due to one-time charges, Honeywell's adjusted segment profit increased by 23%, leading to a significant EPS boost. This was supported by higher adjusted segment margins and a lower share count.
Operational efficiencies and future outlook. Honeywell's operating margin contracted by 640 basis points to 10.2%. What were the main factors behind this?
The contraction was mainly due to a one-time impairment charge related to the classification of certain businesses as assets held for sale, and charges within the Aerospace segment related to litigation matters. Excluding these, the adjusted segment margin actually expanded by 240 basis points.
Looking ahead, Honeywell has issued a strong outlook for 2026, with an adjusted EPS forecast of $10.35 to $10.65. What are your thoughts on this guidance?
The guidance reflects a 6% to 9% increase, which is quite optimistic. Honeywell's strategic initiatives, including the planned spin-off of its Aerospace segment in Q3 2026, are expected to streamline operations and enhance focus on core areas, potentially driving further growth.
Segment performance and strategic initiatives. Let's delve into the segment performance. Aerospace sales grew 21% organically. What contributed to this impressive growth?
The Aerospace segment benefited from strong commercial aftermarket sales and increased defense and space demand. The segment also saw a significant margin expansion due to the impact of the prior year's Bombardier agreement.
On the other hand, Energy and Sustainability Solutions saw a 7% organic decline. What challenges are they facing?
The decline was primarily due to demand softness in petrochemical catalysts. However, orders growth in LNG and refining projects remained strong, which could offset some of these challenges moving forward.
CEO commentary and strategic outlook. Honeywell's CEO, Vimal Kapur, mentioned strong results exceeding guidance and a record backlog. How does this position the company for the future?
With a backlog exceeding $37 billion, Honeywell is well-positioned for sustained growth. The CEO highlighted the company's progress in portfolio optimization, including the spin-off of Solstice Advanced Materials and upcoming aerospace separation, which are expected to enhance focus and drive long-term growth.
What are the key strategic moves Honeywell is making to ensure future success?
Honeywell is focusing on simplifying its portfolio and enhancing synergies across its business segments. The announced leadership team for the aerospace spin-off and the strategic alternatives review for other segments are critical steps in this journey.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.53 for Honeywell, but the company delivered an adjusted EPS of $2.59. What does this tell us about Honeywell's performance?
This EPS beat by 6 cents indicates that Honeywell not only met but exceeded market expectations. The company's ability to manage costs and drive profitability, despite the challenges, showcases its operational strength and strategic execution.
How significant is this beat in the context of Honeywell's overall performance?
It's quite significant, as it reflects the company's resilience and ability to navigate through one-time charges and market challenges while still delivering strong financial results. This performance boosts investor confidence and sets a positive tone for the upcoming fiscal year.
Key takeaways. In summary, Honeywell has delivered a strong fourth quarter performance with a 6% increase in sales and an adjusted EPS of $2.59, beating the forecast. The company's strategic initiatives and robust backlog position it well for future growth. John, any final thoughts?
Honeywell's ability to exceed expectations and its strategic focus on core segments are commendable. The positive guidance for 2026 further underscores its growth potential. Investors should keep an eye on the upcoming Aerospace spin-off and other strategic moves.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Honeywell's performance in the comments below.